You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim.
Well, today I think we're going to be looking at 3 or 4 different things, or maybe just 2, but a lot of different little subheadings under them. The first one, the 3 phases of a bull market and how you can take advantage of them. And you should also be planning for the coming goldandsilver.com mania. Same kind of hysteria, I guess, we saw with the .com collapse.
Each market that goes into a full secular phase tends to have the same markers, whether it's high-tech or whether it's tulip bulbs or whether it's gold and silver. And I firmly believe that down the line here we are going to see a public mania and the blow-off phase of these precious metals markets. And if we can kind of get a sense of where we've been and where we're headed, I think it can help people to not drive off the rails before that happens, but then get off the rails before it ends. And the first phase of a bull market is what I'd call the early worm getters. And these are like the early bird gets the worm. These are the people that were looking and sniffing around at mining stocks back in as early as 1998 and certainly up into 2000, up into 2002. And they took positions when some of these companies that are now fairly well known to investors were penny stocks. I mean literally as in under 15 cents. And some of them went up to several dollars and some of them are still there. And so they got what Doug Casey calls the easy money. So the easy money's been made in that first phase. And that phase kind of lasted until probably around 2005, 2006. And then, in fact, in 2006, people's accounts pretty much doubled in about 6 months. And when that phase was over, then we had some real bumpy times. And the really rough time was around 2008, 2009, when the whole financial system globally just about collapsed. And then also what we've been enduring lately from around the middle of 2011 until right now. So we're in that shakeout, heartbreak hill phase, that I would call it. That was still in the first phase. And then overlapping that is what we have in the second phase now, which I would call getting some respect. We have new investors coming in. We have a lot of people under the radar buying physical. That's why we're having really large amounts of volume where people are buying American and gold, American silver eagles and gold eagles, and a lot of bullion purchases. And of course, India and China are in the news for their massive purchases. And this is the phase where more people kind of come on board, but the public still isn't involved in a big way, certainly in the United States yet. It's even with these large sales of silver eagles, most people really don't get the picture. And so during this phase, which has been going on for the getting respect phase, which has been going on for the last couple of years, more and more people are coming out and talking about gold and silver, but it's still kind of under the radar for the average person on the street. I mean, you have people with as big a name as the people at PIMCO, which is the largest bond dealer in the world, talking about you need to own some gold, and they've never said anything like that before. So I think this is setting us up for that evolution into the third phase of the market, which will evolve slowly and then over time pick up enough speed and finally end up with a massive blow-off. And that third phase was what I would call everyone in the pool, the public mania. And so at this point, people will be out there trying to buy the physical metal, and it may not be available, and if it is, the premiums will be going through the roof in addition to the price itself, and then they'll be inevitably directed into the mining shares in the different stock markets globally. And I think that then we'll see that going on, and I think this is going to get underway this year, kind of the early rumblings of it. And what it's going to take for us to move into the launching of that third phase, in my view, is going to be the establishment of new nominal highs for gold and silver prices. We're going to need to see a base built, and it'll take several challenges before this happens probably, but we need to see a base built in silver above $50 an ounce and in gold above $2,000 an ounce.
So do you have any idea how long it's going to take for that to happen, or what's the kind of what you would call the silent trigger?
Well, I think what's going on now is like the analogy that I would use would be a river that looks pretty calm on the surface. You can see there's a current there, but underneath it's really deep and the currents are going back and forth and surging and almost like an undertow going on in some of these pools as the river winds its way downstream. And I think that's what's going on now, or maybe even a deep ocean current would also be another good analogy. So we're having these factors coming up which everybody's aware of that's paying any attention, the massive debt levels that countries are running, the massive demand that's increasing for the physical metal. The mining shares are kind of the lonely orphans right now, but I think that's going to change. But all this is happening kind of before our eyes, but yet we really don't understand and see the depth of it. And if the problems that we're dealing with aren't solved, which they're unlikely to be done in the near term, this is going to keep building and building, and at some point there'll be, as you say, maybe a silent trigger. I think it'll be a loss of confidence on the part of enough people that suddenly it will become obvious to many, many people that things aren't going to get any better. They're losing their purchasing power, and also not only the fear of losing the purchasing power of what they have, but also the fear of not getting on board. So there's two kinds of fear. Initially, the fear of loss, and then the secondary fear, which can be even more powerful than the original one, the fear of missing out.
Wow. So, yeah, you said when people panic, they're not thinking. So if we hit the so-called benchmarks here for silver and gold, what happens when gold hits 2,000? Will people say now's the time to buy, or is it too late to buy if it hits that?
Well, they'll be saying that, but then the greed factor will take over. And, it's trying to predict just exactly when this is going to happen is so difficult because, I know when I looked at this 10 years ago, I would have thought we'd have been there about right now. Well, it looks like we're going to have to push it out a year or two or three. So the point is it's going to happen, and it would be sad for people, for investors to, especially some that have been around this for a number of years, to give up or get knocked out of the game because they were too aggressive in their investment, or get knocked out because they were broken psychologically or financially because they went in on margin or something like this. So I think it's going to be big enough that people can have a modest position in the mining stocks and in the physical and still do quite well. So they don't need to go out and take a second mortgage on the house and things like this. They just need to be calm, cool, and collected. And if they have a portfolio, keep trying to tweak it to get it so that you have what I call best of breed, not only in terms of producers, but also exploration stories.
So you have to, again, keep track of who's doing what for you, how well are they doing, what's their track record been in the past, and what are the analysts saying about their future.
Exactly, and keep in touch with management. Go to these conferences. Go, for example, we got on the 20th and 21st in Vancouver, BC. We've got the Cambridge House Conference coming up. David Morgan's going to be speaking there, and he's actually going to be talking about some of the very things you and I are discussing this morning. About it's still not too late to get into this market, and how the really, really huge profits occurred during the latter phase of that market. And he'll be talking about that in depth, and he's discussed this for a number of years. And I think anybody that can get a chance to go and listen to what he has to say will be really rewarded in terms of their knowledge base increasing.
Yeah, now when it comes to keeping track of stuff, of course, nowadays you have instant stock stuff right there on your iPhone, for example. I can keep track of everything that I have. Other things I follow just for interest, like Facebook. Will it ever get back to what its initial offering was? I think of that. I didn't put any money in, but it's interesting to watch and what it takes to trigger stuff. So people are doing that. Is there a danger, or should you react immediately to whatever you see on your stock chart, or should you step back a bit?
Well, yes and no. Yes, in terms of the standpoint, if you're well informed and you've made an informed decision, and no, if you're not aware of the bigger picture. And this is where a lot of people get knocked out of the game. They kind of go around like a cork bouncing around in the waves, and they don't have any little anchors to kind of keep them in place so that they can keep an eye on the bigger picture. So if gold is down or silver's down, they go, oh, the market's over, the bull market's over, and they dump all their positions. And they usually dump it right into major support, and then it turns around and goes up in another strong leg, and they get to the top, and then they haven't got a position or as much, or they buy too much, and then it goes down again, and finally they're just taken out psychologically and or financially. But the reason that I think, and you kind of alluded to this just now, that I think this will be maybe the biggest financial market of the modern time in terms of a bull market blow-off, is that we have the ability, you and I have the ability with our iPhones and with our computers to make these kind of investments very, very quickly based upon news as it goes around the world very, very quickly with the Internet. And this was, during the last big mania that we had in 2000, the dot-com mania, where people bought companies anything that had .com on it. I think there was one called petfood.com. If it said .com, they bought them, and they drove some of these companies up to hundreds of dollars a share from nothing, and they had nothing, and eventually they ended up having, the people that invested in them had nothing either. And so if you magnify this, because the internet was relatively young then, if you magnify this by hundreds of millions of people, literally billions of people worldwide who have the same kind of abilities that you and I do, capability, with their laptop, I think that this was going to cause prices to just go beyond, in many cases, what we can even imagine. And that's going to be fascinating and fun and scary and potentially profitable if we can stay on the rails getting into that phase.
You were saying, people are so connected now. The guys mining for gold in the middle of the Amazon jungle know the exact spot price of gold in London.
Right. You can't go anywhere in the world without finding that out. And that's also just amazing and fascinating. And it also points out to the enduring fascination that people have with the precious metals, with gold and silver. And I think we're going to see platinum and palladium becoming more and more exciting to people as well, too. It'll be one of those markets that lifts all boats, maybe not at the same speed, but they're all going to be moving upward.
Yeah, it's still surprising that platinum is still below below gold.
Right. It's been below gold. I think for about the past 18 months it's been less than gold, which is really an anomaly. And I think that's going to change. It won't change overnight, but it has narrowed quite a bit since you and I started talking about it. It's closed about 2/3 of that gap. So it may not bump up there tomorrow, but the trend seems to be changing in that regard, getting back to its historic relationship of costing about $100 to $200 more per ounce than an ounce of gold.
Well, I know the automotive industry uses platinum every day to make their catalytic converters, and all the automotive transportation analysts are saying this is going to be a hot year for car sales around the globe. And when we say, China and India, China on a slow day sells 50,000 cars a day. India, it's 40,000. That's a lot of platinum being used up.
It really is. And so we're not necessarily going to see a moonshot on platinum, but I think we're going to see stronger prices and the continuation of the uptrend. But my focus, I guess if you said, if you rated these in terms of your four favorites, where would they be? Well, my number one favorite is silver. My number two favorite it's kind of tied between palladium and gold. And my number four favorite would probably be platinum in terms of what I think are the potential percentage increases that we're looking at. And so, you don't even have to be involved in all four. If you're just going to choose one, I'd say it would be silver, because it's fascinating. It has tremendous potential. It's an investor as well as an industrial metal, and you're going to pay for it with the extra volatility. You're going to see bigger swings on a percentage basis than you are in gold or palladium or platinum, but you also have a larger profit potential, especially if you can buy into weakness.
Well, we all remember, or maybe we don't, the Hunt brothers trying to corner the silver market and what that did to prices. Any chance of just maybe one or two big players trying to do the same thing again?
Well, I think it's going to be more of a number of big players and many, many small players, many what Ted Butler calls small hands. And they've been doing that. They've been buying millions of the Silver Eagles every month. And in fact, I think last month there was a record amount that were purchased in 1 month. So, we're looking 2 to 3 million ounces a month that are being purchased just in that one coin alone. And so the combination of the big hands and the small hands, I think, are going to cause the metals to move progressively higher. And especially, it's so hard for people to buy into weakness. Right now, the charts look pretty sick on a lot of things. It's hard for people to step in and buy a little bit. But if they do, and if they try to buy lower still, now don't put all of your money in on any given day of the week, then you end up with a lower cost average. And if we're correct that the bull market has years to run, then I think they're going to be doing very well going forward. We all have to make our own informed decisions on these things, of course.
Yeah, well, the Warren Buffetts of the world got rich because when the markets hit bottom or what they thought was the lowest, that's when they swoop in, buy all this stuff cheap, and then watch it rise again. And like you said, by the time people notice the trend, maybe you miss the boat or a bit of the trip.
And gold and silver are not cheap now historically. I mean, who would not want to have more that they had bought at $300 an ounce for gold and $5 or $6 or $7 an ounce for silver? But as Doug Casey says, the easy money has been made, but the big money lies ahead. And that's what David Morgan will be discussing, where we end up with the potential for as much as 80% of the potential profit that can stare you in the face during the last 10% of the time of the bull market.
Well, we'll be discussing more about that next week, and looking forward to finding out what people think is going to be the future for finances. And if 100 people make a guess, about half of them are going to be right and the other half wrong, but you don't know right now.
That's right. And if you got to take a position. If you don't have a position, as the Chinese say, knowing without acting is the same as not knowing. So the idea is to take an informed position and then follow along with it.
My guess is, but thank you very much, David, by the way. Happy New Year. And hope everything else in 2013 works out the way we hope it will. I know people always start off a new year pretty optimistic, and so far we haven't seen any reason physically yet not to be optimistic.
Well, the same to you, Jim, and I think the thing is that we just keep looking at this as a lifelong learning, and this is just in one area, but being consistent and reassessing our own assumptions and listening to other people so that we can learn from them and see how we can fit that into our own paradigm. And it's fascinating, and it's scary, and it's fun, and I think it can be profitable.
My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio, and you can contact us at info@HowStreet.com. I'm Jim Goddard.